So hello everyone and good evening from wherever you're joining in, and welcome to the Digital Trade Investor Workshop. So my name is Jeffrey Akimu and I'm the Stakeholder Engagement Officer for the African Business Angel Network, and I'll be handling the overview today for this session. So June, can you move to the next slide? Yes. So first of all, we just want to do a quick poll to know where each and every one of us is calling from. So a poll should have displayed on your screen, so you can just select which region you're calling from. So we just have to have a better visibility of the people in the room. So me personally, I'm calling in from West Africa, Lagos, Nigeria. So let's just do a quick poll. Let's just give 1 minute for everyone to also answer the question on the poll before we progress. Okay, that sounds great. It's great to see different engagements from different parts of the continent. We have majority calling in from West and Eastern Africa, which looks good. So nice to meet you all this evening. Hi, Simon. Thank you for joining in on the call. So before we start, I just want to give a brief overview of the digital economy in the world in general, then we'll move into the continent and in-country examples. So the digital trade economy in the world is, according to the World Bank, about 15% of the global GDP, which accounts for about $12.75 trillion. And over the past decade, the digital economy has grown 2.5 times faster than the physical world. That means that the digital economy has grown faster than the traditional sectors producing, let's say, goods and services. The economy is slowly being digitized and is moving at a pace of 2.5% faster than the physical world. John, can you move to the next slide? So beautiful, bringing it onto the continent now. So intra-Africa trade has the potential to increase from 18% of total trade to 50% by 2030 and leave 30 million people out of extreme poverty. So these figures are given to us by the African Union, and they say that African trade currently is at 18%, can move to 50% by 2030, which is majorly driven by the African Free Continental Trade Agreement. We're going to see more intra-continental trade deals happening. There's more deals between countries in Africa with the adoption of a global payment system for the African continent that is being worked on by the PAP system. So transactions between Nigeria and Cameroon, transactions between Nigeria and South Africa are going to happen more seamlessly. We will have less need for people to trade between Nigeria and Cameroon having to go through the dollar system. That's converting your Naira to dollar to move it to like South African Rand. So we're going to see more local currency transactions between countries on the continent. And we can also see that in Africa, traditionally, people are seeing cash as king, with many countries having now seen record growth in e-payments over the past 2 years, with the advent of digitization on the continent due to the effects of COVID-19, with the work that is being done by the African Continental Trade also. So mobile money transaction volumes in Nigeria doubled to about 800 million in 2020. And that figure has been on a steady rise since then. In South Africa, online commerce grew by around 40% during the lockdown in 2020 and 2021. And we've seen that in general, on the continental level, Nigeria is leading the B2C markets based on transaction values. And in 2020, Africa's e-commerce was estimated to be worth about $33.95 billion. That's a huge sum in the African e-commerce economy. So the way we predict it is that by 2025, this figure should have hit about 50 billion. We predict a steady rise in the Africa's e-commerce sector, with the leading countries as well being Nigeria, South Africa, and Kenya. This is due to the government infrastructure in terms of legislation, in terms of laws conducting like digital transactions, in terms of law conducting dispute settlement and so forth. So these are the leading countries in terms of digital economy on Africa, Nigeria, South Africa, Kenya, and Ghana, to name a few. So can we move to the next slide, please? So which sector is leading in the digital revolution on the continent? We have e-commerce. McKinsey reports forecast that a 50% increase in B2B e-commerce expansion and spending activities before 2025 on the continent. So, for example, we're currently at 33.5 billion in terms of e-commerce on the continent, and we predict a 50% increase on that figure. We're looking at a figure of around 50 billion in terms of e-commerce transaction on the continent by 2025. So Africa offers enormous B2B e-commerce potential. That's B2B is talking about business to business transactions. So there are different types of e-commerce models. We have the B2B model, we have the B2C, we have the C2C and the C2B. But the model that everyone is watching at the moment is the B2B model, because this drives economic development from the back end. This drives adoption, this drives growth. So that's the way we're tracking the B2B index more than the B2C model. June, can you move to the next slide, please? So Africa's electronic payments market, Beautiful, is expected to expand by 152% from 2022 to 2025. Currently, we're in 2023. We can already see the figures have grown between 2020 to this year by over 50%. We have about 33.5 billion on the continent in digital economy, and predict that figure to go further in the next 2 years. Our leading countries are Nigeria, Ghana, Egypt, with Ghana having come up with some new regulations, some new legislations recently on the issues of dispute settlement, on the issues of data protection, on the issues of just digital transparency. And we can see all that submits to the work that players like the Africa Development Bank is doing, players like the Afri-Exit Bank are doing on the continent. So June, can you move to the next slide? So now we want to welcome our digital trade angel network champion, Lynton Peters, who has experience as both an investor and a founder in the digital economy. So Lynton, we're grateful and happy to have you here with us this evening. And I will now invite Lynton to take the floor. Lynton, over to you.
Thank you so much, Jeffrey. That was great. That was a great background into digital trade. Hi, everyone, and it's a pleasure to meet you all. So just a bit of a brief background into myself. I have a background in tech. I was in corporate. I was a corporate slave for about 10 years. Then I turned entrepreneur, CEO, and now investor. A bit of a background, as a corporate slave, I worked in both South Africa and Singapore. And as an entrepreneur in South Africa, I built one of the largest e-commerce startups in South Africa over a period of about 5 years. We built it from a team of just myself to about 1,000 people across the country, where we were providing direct or indirect employment. And at the end of 2021, I exited that business to Walmart. So it was a business called OneCart that we exited to Walmart in one of the largest e-commerce deals in South Africa. So now I spend my time investing, trying to grow the ecosystem as well. Cool. So just in terms of this session, I'd love for it to be an interactive session, and where we all talk. So there will be a series of questions that we will do. We'll also do a case study on OneCart using some of the slides, but I'd love it if we can all contribute. Cool. Can we move to the next slide? Okay, so I guess the first thing is, why invest in digital trade ventures in Africa? For me personally, I believe that Africa represents one of the biggest opportunities when we look at digital trade. So firstly, if we look at the opportunities that exist in Africa, so untapped market potential. I mean, the African continent is rapidly growing, and there's a rising middle class, and there's also increased purchasing power. I read a stat recently where it says that we would have one of the youngest populations in the world in Africa. Also, what this does is it creates a substantial base, consumer base for digital products and services, and attractive market for investors. growing digital adoption. So what we're seeing, and what Jeffrey just showed in the previous slides, is that really the adoption of digital technologies is increasing in Africa, driven by internet penetration, mobile phone usage, and the rise of digital platforms. So this actually opens up avenues for investment in e-commerce, fintech, digital ventures, and other things. So market gaps and niche opportunities. I think that Africa still has a very underserved market. If you look at more developed markets such as the US, Europe, and Asia, what I've seen, having lived in some of those regions, is that some of the digital technologies that could exist in those countries, there's sort of a time gap for it to actually present itself in Africa. Me personally, I'm based in South Africa, and when I lived in Singapore, I saw e-commerce growing at the same rate that it grew in South Africa in 2018, about 4 years earlier in Singapore. Supported government and private initiatives. I think this is sometimes, and it depends on which government, but really, many African governments are recognizing that, the potential of digital trade, and they're trying to put together grants and incentives. We may not get it right all the time, but I'm keen to hear from you guys as well, from whatever jurisdiction that you are, whether you feel that, government is supportive. And then, of course, things like digital financial services. So, we're experiencing a revolution in digital money and things like that in South Africa. And, if we are able to tap onto the right trends as investors, and that's the ability to spot the right trends, I think that, it's a massive opportunity. Also, increased funding available. I remember when I was building the business in 2017, venture capital, when we looked at it in South Africa, was very much at its infancy. We're seeing now in the period of 5 or 6 years that it's really accelerated, and we're going to see that going forward as well. So I'll just touch on the challenges. So obviously in South Africa, in Africa, we have challenges, and building startups in Africa is very different to building startups in other parts of the world, right? So, there are things like infrastructure challenges, so inadequate digital infrastructure. Sometimes we see that with limited internet connectivity, unreliable power supply. We are currently load shedding in South Africa here, so I'm thankful I have solar. Insufficient, tech capabilities sometimes, and that can pose challenges. As investors, we need to be able to look at this on a case-by-case basis. Regulatory complexity. So sometimes navigating regulatory environments across some African countries can be complex, because there are things like inconsistent policies, unclear regulations, and things like that. Market fragmentation. So we live in, Africa consists of basically diverse markets with different languages, cultures, and consumer preferences. So I think that, as investors, we also have to consider, market segmentation and localization strategies so that we can effectively target specific customer segments that we're looking at across different countries. And then, of course, like with any investments, there's risks. But in Africa, for example, certain risks that we look at, is obviously political instability that could happen. For example, I was looking at a company in Sudan that was looking at building a neobank, and now there was a political situation there. So they've decided to pull back from that. So we have those types of things in Africa. And of course, financial inclusion. We are progressing as a country and continent, but I think that financial inclusion still is a challenge for many African countries. And we as investors and entrepreneurs must consider strategies to potentially address this and be able to bank the unbanked population, and develop inclusive financial strategies to each of the markets. Please, if there's any questions, please feel free. If there's anything, please stop me and we can keep it interactive. Please move to the next slide. Okay, so we want to ask questions, and one of the first questions that we'd like to pose to the audience is, as investors, and most of you guys are more seasoned investors than I am, how do you evaluate investment opportunities? And if you want to, maybe share an example of successful or failed investments. We'd like to, Jeffrey, am I correct? We'd like to open this to the audience.
Yes, you're correct.
Awesome. So please, not all at once, eh?
So anyone that wants to speak from the audience, just raise your hand and you can go ahead and speak.
Yeah.
Yeah, I can go.
Yes, please.
Yeah, so there's many things that one looks at, but just top of mind is the team's ability to execute. That's very key. And second to that is the size of the opportunity, so size of the market. And so if there's a big market and there's ability of the team to convert that potential into actual numbers, then you're on to something interesting. Over to you, Jeffrey.
Perfect. I think that's really key. Those are two great points. Anyone else?
Yeah, Lynn, maybe I can chip in. So I think two good points there. The market and the team is always important. And the third that I would add is the product. We actually have 8 metrics that we look at when evaluating, but to sum up, I think the 3 most are definitely the market, the team, and the product, the tech.
Yeah, definitely. Thanks, guys. Anyone else? Cool. So I completely agree with both of them. And the second person on the call was Lucian. He's actually my brother, and we look at investments together at Everyone Ventures. And I think one of the biggest things that you guys mentioned is team. And team is extremely important, especially in early stage startups, because essentially what you're doing is you're backing the jockey. Yeah, perfect. Jeffrey, if no one else wants to contribute.
Yeah, we can move to the next slide.
Yeah,
we can move to the next.
Okay, awesome. So I guess another thing, we spoke about team, size of the market, and product, right? Those are essentially great things. But Jeffrey, are we doing this poll?
Yes, we can just quickly do the poll. So the poll is about to assess whether we are willing to, as members of the Digital Trade Angel Investor Network, if we're looking to lead a deal on digital trade investments, or if we're looking to co-invest with other investors leading a deal on digital trade investment. So take, for example, members of the Mo Angels Angel Network last year invested in a startup called Duhqa, which favorably is one of the startups pitching today. So Duhqa was co-invested by both members of Mo Angels in both Mauritius and Nairobi. So we're looking to see that, okay, our investors within this call willing to lead lead an investment round into a startup, or are they looking to co-invest with other investors across the continent into a particular startup?
Yeah. Okay, cool. So if we can all do the poll. And Jeffrey, if you don't mind, if you can just share the answers after.
Yes, we can. June, can you kindly display the result of the poll also?
Yes, I will share once the poll ends.
All right, no problem. So Lynton, you can proceed with the.
Okay, sure. Thanks, Jeffrey. So another question, which I'd like to ask and get some engagement is, as you guys evaluate deals, right? How important do you think it is when you assess the character of the entrepreneurs in the due diligence phase? So how important do you guys think it is? And how do you go about assessing the character of founders? I think that will be very important or very useful for us to actually share stories and also the metrics that we look at in terms of founders. So I'm going to leave it open again, and please feel free to contribute.
This is Isaac. I could do a small contribution because I think that the question you asked is like huge and very relevant, especially at this stage and for angels. And fortuitously, I'm going to answer it with Duhqa as well. I met Victor on Clubhouse about 2 years ago.
Right.
And yeah, there was just something about him. Like, he presented, and then there was a follow-up, email group, and the willingness to which like he was able to like just volunteer to help some other founder that was struggling with like just putting the deck together, because we're like, oh, like Victor's deck and pitch was like phenomenal, and he was trying to raise then, but he was also willing to like help some other random founder that I found on Clubhouse. So I'm like, I don't have any exposure to Kenya. I don't even know what's going on in Kenya, but like this founder, like, like this guy would do well. Right? Like this, it's hard to like tell, like, do full due diligence from like, remotely. But for me, I was like, just the quality of this person is like speaks for itself. And it's someone I want to be associated with. Now, that group in Clubhouse didn't end up doing an investment in Duhqa because, like not enough people committed and stuff. But so I've stayed in touch with him, and probably like every 3-4 months, like, drop a message here and then still responds, and couldn't be more excited for like all the progress that he's achieved since then for him and his team. I tell people at the early stage, ideas would change, startups will pivot and find different opportunities. That leadership skill and quality to attract the best people to you, and stakeholders that support your mission and vision and help you take it like all the way. It's hard to find that quality, and you can almost tell in interacting with people, like once, twice, you can tell from like the interaction that, okay, like this person has it.
Yeah. No, Isaac, I completely agree with you. I think that I've had that as well, where there's just been like 1 or 2 people where you're just like, okay, that person has it, and same, I want to be associated with them. And if they're doing anything, I think that I'd be able to back them. But I don't want to put you on the spot, but if you could, like, what do you think that characteristic was that really stood out for you? Like, what was that, like, the main characteristic that stood out for you?
Yeah, so for me specifically was, there was the little things like the follow through. Like someone asked a question, the quickness with which you responded or said that, okay, I'll get back to you, and then following up on the email to like, oh, I'll follow up with this person to help them with this, and then send the email chain after, say, the follow up. Or, I think subsequently he applied to a couple of programs because he said he was going to apply, and then seeing him get into like the Techstars program shortly after I applied, and then sending him a message to say like congrats, and then getting the response. Because sometimes like, people get carried away, right? Like, like when they're doing some early success, they get carried away and they miss emails, miss messages. The ability to be able to like prioritize, to sort through and follow through on stuff, like I think it's an underrated skill that I think serves people well, right? Like, because again, like someone like you've built startups, you've engaged people at like very senior level. You can tell that, if someone senior sent you an email for an opportunity and you miss it, then it's gone, right? It's like, it's almost like it's that one opportunity. Like you have to be like ready at all times. And there's a lot of things going on. So I can imagine like there are founders that raise and they tell you like, okay, I'll send you my cap table afterwards, or I'll send you this stuff afterwards. And you don't hear from them for like 6 months. They're like, yeah, so many things going on, right? So I appreciate a lot founders that can follow through, that can engage timely. For me, I think, like that presence is huge.
Yeah, no, I completely agree. I mean, side story that maybe I can share for 2 minutes before the next person is that, so I had a similar experience. It was actually when I was building a company though, and not as an investor. So I was building the company, I was the CEO of the company, and there was a guy that worked at another company, but he was the CTO of that company. But I engaged with him about 2 times and I was like, man, this guy is quality. And if I could just have him on my team, I think that, my business will go from where it was stagnating, and it would just go into another level. And it was the similar things that you talk about in the engagement, being able to follow through, the questions that you asked. You could just see that this person had the characteristic of persistence. He knew what he was talking about. He was a self-starter. 2 weeks later, he called me and he was like, there's an opportunity for me to leave my company. I flew him up the next day and he joined, and he was my CTO, and it literally changed my business.
Nice.
Yeah. Cool. Anyone else? I'm sure you guys have lots of stories, and we'd be keen to hear.
Okay, Lynton, while we wait for more feedback, let's quickly just move on to the next slide in light of time. So, June,
Sure.
Can you progress to the next slide?
Yeah, perfect. All right, cool. Jeffrey, how much time do I have left? Just so that I know.
About 12 minutes, 12 minutes, 15 minutes, give or take. Let's just say 15 minutes.
All right, cool. So I don't have that much time. What we just want to do now is just go through a case study of a startup. We're going to use the one card example because I ran that startup. So let's move to the next slide, June. Okay, cool. So essentially, I'm going to talk about this and then obviously use it from the lens of me being an entrepreneur in the startup and, what we try to portray, as well as, now trying to talk about it from the investor lens. And essentially, let me just give you guys a background of what OneCard is. So OneCard was basically the premium leading grocery aggregator in South Africa. What we allowed people to do was, in a single platform, we allowed them to shop from multiple stores in a single basket. So you could shop for grocery, pharmacy, pet food, alcohol, whatever you wanted across multiple categories. We would consolidate, shop it for you, and then we'd get it to you within a single hour. So that's the product that I built, and we scaled that so that it was able to do it automatically while we were doing tens of thousands, thousands of orders a day, right? And that's at that time. This pitch that we're looking at as a case study is essentially you could call it our Series A. So we're looking primarily at it from an expansion lens. So it would be a bit, the investment memorandum is a bit different when you look at it from, the early stage startups. So on this slide, what we were doing, of course, we were talking about OneCart, who we are. We had developed this platform. We had done it. We built it. We began to aggregate SKUs across 100,000 SKUs across groceries, liquor, baby products, all via single shopping interface that was working at scale. What we'd also done is that we'd built our delivery infrastructure ourselves. So we hired our own drivers. We did it in a certain way, and then we productized that into something where we monetize our technology with some of the retailers in South Africa. And then we began to explain, so OneCart was operating across 51 locations across South Africa, and we plan to expand it to 91, which I assume the team has now done. I'm no longer there. And based on the business model that we're looking at, expanding into Africa as well. But essentially at this stage for investors, what we were showing is, okay, look at us. This is what we've done. We've built this platform. It's working at scale. We're now across 51 locations. It's working, and we're looking to raise capital for expansion. Next slide, please. Also, if there's anything that you guys want to say or any questions, please stop me. Then, we began to talk about, two people spoke about product in this. So one of the key differentiators that we built, so I'm an engineer by trade, or once upon a time, was our key differentiator, was our technology capability. We had built capability in-house, which would allowed us to do all of this without any human intervention. So a person placed an order on our app. It went to a shopper that was shopping somewhere. They got a notification. Then we had a centralized control of everything that happened on the field. We tracked everything in a granular way, and it would then go from the shopper to the driver, and then to the customer. All of this, so you had tens of thousands of orders happening a day for ourselves. And we also built the tech, and we ran the orders for one of the largest retailers in South Africa successfully. So this is what we're doing, and we wanted to highlight our technology because at the time, lots of people had tried, and they weren't too successful. Next slide. So, what we were doing here is to show our journey, right? And, I think as investors, we look at startups at different phases, I don't look at startups when they are, pre-revenue or before they launch. But then, they launch, then you try to build a proven model, then you try to go to scale. And then the last part is trying to, build market share. So in 2017, what we had done, was building this app. We launched to the public. I raised seed capital. Obviously, raising seed capital for the commercialization of OneCart, what you would have seen in the pitch was completely different, right? There you're talking about the problem statement, then you're talking about the solution, why we're going to win. Here's our go-to-market strategy. This is how we're going to do it. In this case, we had already passed that. So, we raised seed capital. We participated in lots of the programs, and we always were awarded, top startups in South Africa. In 2018, we only were in 3 locations. 2019, we completed our, you can call it our pre-Series A investment round. We started seeing growth in excess of between 400 to 600% growth. We're then named the top 5 startups. So we're doing all of this to show validation of what we were trying to do. And as an investor, that's just trying to build confidence. And then we began to expand from 2 vendors to 6 vendors. And then quite rapidly, we moved from 3 locations to 26 locations. So now you can see that we've started building a proven model. And what we're trying to show to investors is that here's our growth rate as we were doing it. Then, we began to scale one card. The next year as well, we got 500% growth. And then we got institutional shareholding. We began to get strategic partnerships with the big banks. What I began to do was then launch another service, which we call Last Mile as a Service, where we basically assisted retailers to develop with their last mile. And we built technology for them to facilitate that. And what that did was, because e-commerce, usually e-commerce in the first few years of launch, it sucks money, right? So it doesn't make a profit. So that was our way of trying to generate revenue during this time. So we're trying to show scale. Then we began featured in Forbes, Fast Company. In 2021, now we're showing, okay, this is what we're doing, and this is how we have expanded. So from an investment perspective, as an entrepreneur looking in, this is what we were trying to show, is that, we've gone through all of this. This is why you should potentially look at us for investment. Next slide. Jeffrey, just tell me when I have 5 minutes, okay? So then...
You have 5 minutes, sir. You have 5 more minutes.
All right. So what we began to do then is to show, okay, here's our 3 different business models. So in our marketplace, which was our bread and butter, what we had done is we built this. We were able to register vendors. We started with 2. Hey, guys, look at what we've done. And this is a business that was scaling. There was a large market opportunity. The size of the market was big. And a funny story is that we started to raise a significant amount of capital, and it turned into an acquisition. So yeah, that's just a side note. Then we had the second option of Last Mile as a Service, which I mentioned, and that was growing well. We already secured a client. So that was generating revenue. And then we had a technology platform as a service, which I won't touch on now. Okay, next slide. Okay, so one of the things, of course, to understand the size of the market, and I think is very important for investors, is to understand, okay, what's the TAM? So what's the total addressable market? What's the serviceable addressable market, which is what you can do? And then, what is the market that you plan to capture? So this is what we were trying to show. Due to confidentiality, I can't show the actual numbers that we presented. So I'm just showing this generic slide. Next slide. And then, of course, so we try to anonymize this as much as possible, but, what you need to show is as an investor, one of the things to look for is obviously, okay, this is what the guys have done. They're doing very well. So 400 to 600% growth. In COVID hit, we did 700% overnight. Okay, that's great. So what does the forecast look at? Judging that with the market opportunity, how are these guys actually going to achieve it? And then, looking at the team, can the team execute, etc. So, and do they have a scalable product, which is, things that we spoke about earlier. Next slide. Okay, so won't really touch on this, but, this was just really showing, okay, this is what we were doing. I started off this business. I built a marketplace. I expanded my vendors. Then I built this Last Mile as a Service to generate revenue. And that's where I was in the puzzle. Then I was on the last 2, I was trying to show investors, this is what we were planning to do as we were raising capital. But of course, we got acquired. Didn't do that, but that's essentially what we're showing, and that was to show what we're doing in year 1, year 2, year 3, and how we were going to achieve it. Next slide. And then some of the things that we spoke about that we look for, is okay. As an investor now, this is what I look for, management strength. So how strong are these guys, and do they have the ability to execute, right? That's the one thing. On the soft side, you know, it's the leadership, okay? Also, it's the industry knowledge. So we had an exceptionally strong team, and we had, you know, so it was there. From the technology side, that was done, and we actually had Walmart's execs review our technology and gave us the green light as we were going through this possibility. What is the scalability of this? And there was scalability in this. What was the regulatory risk? So there wasn't. And then, you know, we began to show this. So as an investor, these are some of the things that I look for, you know, industry management strength, ability to execute. The founder have to be able to work with the founder. Do they have a good product? How is their technology built? Is it a scalable market? And is there any risk? So as an example, I was looking at this one bank and it was in Sudan. So, you know, the management strength was great. Technology was great. It could scale, but it was still a thing. But there was lots of regulatory risk. So, you know, we decided to pause on that. Yeah, but that's just some of the things. Next slide. Is there a next slide? Yeah, so, well, I think, you know, that was essentially in a very short time, me trying to explain or going through a case study on one card. I'm not sure if it was helpful, and Jeffrey, I'm not sure if we have time for any questions, but I hope that helps you guys.
Yes, that was really helpful, Lynton. That was very, very helpful. So this last question is just trying to find out, beyond the 5 things you mentioned, beyond the technology, beyond scalability, beyond the regulatory risk, what other factors do investors in the room consider when they're doing due diligence for a digital trade startup? So anyone that has any inputs, any other metrics they look at can always chime in here. So looking forward to hear from investors on the call now.
Yeah.
Maybe Jeffrey, I can step in. So, I mean, when you're talking about digital trade startups, of course, you know, everything that we've mentioned before is important, right? So, and so the team, the product, the market, and I also believe that they vary in importance depending on the stage of the startup. So, of course, at a very early stage, it's all about the team. Perhaps they have a product that's in its infancy stage, but it's all about the team and their ability to execute. As it gets more mature, then potentially, you know, you're looking at the market. You know, how big is it? How can you scale in the market? So all of those are important, and maybe to specify on digital trade startups, you could look at certain metrics like customer acquisition cost, lifetime value. I would say those two are potentially the two most important when looking at digital trade and specifically, I guess, with regards to e-commerce type startups.
Jeffrey, you're on mute.
Sorry, yeah, that also speaks to issues like customer retention, right? So the ability of a startup to retain customers after their first purchase is really key. So getting that customers coming in for their second time purchase is really key for a digital trade startup. So we have Roderick with his hands up. Roderick, you can speak now.
Yeah, yes, thanks, Jeffrey. I have a question. It's a little bit, it doesn't really speak into what has been put on the slide, but I'm just wondering, maybe, Lynton, you'd have some insights. In a market like Tanzania, the informal sector is more than 90%. And now when you come up with a digital product, that is trying to balance between the formal and the informal, there's tax implications, and it's sometimes very tricky to to meet the regulations, because you're competing. If you do pay all the taxes like you should, you find yourself not able to compete with the informal sector. So I don't know how if that was a factor for you in South Africa, and how would you respond to such a challenge?
Yeah. So are you talking about so firstly, on our product, actually it was primarily in the urban areas. The plan was to get into townships or the rural areas, but we never actually got into there. But just on your point, are you talking about building a a product that would potentially solve one of the problems that they currently have? And the taxes that you're talking about, is this normal company taxes, or is it something else?
Yeah, so the taxes I'm talking about are the VAT, custom duty, because we have products that come in formally and pay all the taxes at the point of entry, and then they find themselves in the market, and then some are not declared. So when you go to the market, say for a cosmetic product, the vendor might tell you, do you want it with a receipt or without a receipt? Which means if you're getting it without a receipt, there's some taxes that are not being paid. Now, when you bring a platform like yours, you're saying that those who are coming in are going to pay the market rate and all the taxes will be paid. So you might find yourself overpriced when you compare with competitors who are informal and are not playing by the rules.
Yeah, sure. I think that's potentially true. I think I'm not sure exactly on the markets in Tanzania and how it works, but in the informal markets here, it really is. We see the little shops and things like that. But what we see going on here is that they are actually buying from formal retail. So they would go to some of the wholesalers, like a big wholesaler, and then they would buy, whereas they buy singularly. And one of the ways that we try to, or one of the companies that I'm helping at the moment is trying to reduce the costs around that, is to allow to group buy, and to allow them to then buy in bulk, and then that would reduce the price that they actually getting it from. Unfortunately, I don't have the experience that you had, but maybe if anyone else has or has, they can share. Sorry, Rarik, I wish I could answer your question in a better way.
It's helpful. Thank you. Thank you for your input.
Yeah.
Maybe, Lynn, just to add to that, I guess with OneCart, you had very little input on setting the pricing on products, right? You facilitated it. So, if you had to take your application to the rural area, whatever the pricing is in the informal area would be the pricing. The tech is just facilitating that, and together with, of course, your agreements on the markup that you would take for each product.
Yeah, that's correct.
Yes. So in line with that, just in light of time, June, can we move to the next slide? Lynn, thank you so much for your contribution, learning more about OneCart, learning on your views on the digital economy. I had so many impactful things from your session. And thank you so much. Once again, Lynton Peters, Digital Trade Angel Champion.
Thank you so much.
I will now introduce Amimo from the ABAN team, who will take us through the venture showcase. Amimo, over to you.
Okay, thank you very much, Jeffrey. My name is Amimo Chila, part of the ABAN communication team. So welcome to the second part of the workshop. which is the venture showcase, where we'll have 2 startups pitching to the angels present. Please note that each startup will be given a total of 15 minutes to present, which will be split into 2, where 7 will be used for pitching and the other 7 will be used to for questions from the angel investors. So the first startup that will start us off will be Duhqa, led by Victor.
Hi, everyone, and thank you. So my name is Victor Maina, and I lead a company known as Duhqa. Next slide. And here is where we start Duhqa, or the vision of Duhqa. We looked at how many Africans are living under $2 a day. And as the World Bank says in one of the research papers, this is about 490 million Africans. So the next question we asked is, of this 40% of the population, where are they spending this money from? Spend money at? And in the next slide, you'll see that they spend it in what we call micro stores or kiosks or dukas, depending on which part of the world you are, or of Africa you are connecting from. And what these micro stores are, they're very small, and nobody seems to pay much attention to them, because when you look at trying to distribute to them and the areas that they're located, they're very hard to get to. Their basket size is not so big. So manufacturers, distributors shy away from them, and what is required is for them to travel kilometers to go and purchase inventory. So once you looked at this, we thought, what then is a market problem that you're seeing? 3 things that we're trying to address as Duhqa. One of them is loss of income. If they close the shop and they travel for long distances to go and procure inventory, what they're doing is they're wasting time and they're losing income they would have made. There's also additional cost because nobody is paying for their transportation or logistics. They have to come from pocket and pay the same. So this adds the cost, which then builds to the final consumer, who is only living under $2 a day, and loss of time as they keep on traveling. So in the next slide, what we see is then the solution that Duhqa offers, and it's 3. So the first thing that we do is that we offer shopping tools. That's a snapshot of our app. And here you can narrow down to the product that you want, either from searching it, from scrolling, and you see the price at real time. What we do is that we negotiate heavily on their behalf with the manufacturers, and then we load the prices that are recommended retail price. And by so doing, they're able to see the price, see the product, the pictures, and then shop for the same. Over a period of time, once they've worked with us, what we do is that we allow them to get financing. So we have a credit scoring system that will tell us who we can give, and then we start off on a small ticket, and they build, and it builds as they continue to pay on time. And the last one is delivery. So one of the things that we realized with these particular micro stores is that they run out of inventory and they want the inventory now. So majority of the products that are already in the market would deliver within 24 hours. And what we did is we decided to make it even faster by delivering within 6 hours. Currently, you're doing about 4.7 hours from order to delivery. Now, why is this important? This is important because then it allows us to do a couple of things. One, lower the cost of delivery. And this we expect to be passed on to the final consumer, which is the individual. The opportunity is huge. It's a 350 billion opportunity and growing. And what Duhqa knows we can go for, and it's our target, is 90 billion. And so that's 36% of the total opportunity in Africa. In the next slide, what it shows us is the competitors and the competitor landscape. Of course, being a big space, what you see is that many of the competitors are in, but the big question is, how does Duhqa differentiate itself from the rest of the competitors? We sort of group competitors into 3. One is the asset-heavy competitors on the extreme left. These ones have no technology. They focus mostly on driving volumes using either calling or being called by the customers. They also do sometimes visits in their particular neighborhoods. The other ones are the ones that are sitting between assets and technology. That's why we put them at the middle there. You will find them controlling huge warehouses. And of course, they also have technology. But how Duhqa differentiates himself from them is that we don't think what we need is more warehousing. We don't think what we need is more vehicles. What we need is to optimize that particular ecosystem and marketplace to bring efficiencies. So the approach that we took then as an organization is to say, what we need is to look at the distributors on the extreme left and make them more competitive. How do we make money then? Various ways. We have 4 revenue streams. One of them is revenue commissions. This basically is the manufacturer gives us at a particular price is to push the manufacturer as much as possible for the best margins. When you offer financing, we take 3%. In-app marketing as well is where Duhqa, the manufacturers look at us as a billboard, and they can take space. If you notice to add at the very top, there's banners that go that keep on changing, and that they can take for a month. And if they do take for a month, that's $1,500. And lastly, subscription. This is what you're opening this year, where manufacturers can pull data and be able to see how they are performing on a street level. Just a side note here that the average basket value we are seeing currently is $110 and about 53 kilos per purchase. The next slide shows us our unit economics. So what have we done in the last 18 months? We've done about close to $10 million in terms of revenue. And out of that, 13% on average is what we've taken home. We have about 11,000 active customers. Our service quality is 95.4%. How we measure this is how fast are we delivering, or how fast are we keeping the promise to deliver within 6 hours? So 95.4% of the time we are doing that. Our customer retention, we attribute it mostly to the fact that majority of our customers cannot get the delivery time that we are delivering to them. And so that's why they stick with us a lot. And our customer rating is also good. In the next slide, what we see is our traction. Just speaking a bit about it, we signed about 58 manufacturers, and about 60,000 deliveries have been completed to date. Next slide. Now, in terms of leadership and the team that we expect to drive the vision of Duhqa, we have, these are the ExCo level. They've worked in about 35 markets. They've been part of 4 startups. We've worked in 9 industries. And we believe that this team has what it takes to take Duhqa to the next level. We have investors, and it's 4 investors that have invested in us, as you can see there, a total of 2.6 million. And as you go to the next slide, you'll see we raised this money, at least $2 million in the seed round last year. And this is how we plan to distribute it, with a lot of it being taken by salaries and marketing expenses. And in the next slide, what it shows you is how we plan to grow. So this particular year, especially, we are bringing in $26 million at the very least. We also expect to double that and keep on growing that number. And the year 6 of operation, we expect 153 million, already hitting that target. This year, we also are excited because we plan to break even. And even as we move to raising more money, is just to expand to more markets, one of them being Madagascar that you're going to, and Uganda this year. So that in a nutshell is Duhqa. I'll now give it to you to ask any questions that you may have. And this slide is just showing you the competitions that we've won, 5 of them in total. Thank you.
The floor is open for questions. Anyone who has a question can ask Victor.
I can go first. Hi again, Victor. Great presentation, amazing traction, and good so far. Very quick question for you and the team. So obviously, you're operating primarily in Kenya, right? Which we've seen a couple of startups struggle in Kenya, but we've seen some other ones do well. One in particular in your space, and I see when you showed your competitor slide, I saw Reja, which is by Market Force. I know Market Force raised $40 million last year, but you're not planning to raise this year. Obviously, hopefully, we angels can still come in, but then you're looking at $5 million next year. Are you feeling any pressure from them or other larger funded players that like Omnibiz also that is going into your market from like customer acquisition perspective or even competition with like financing?
Thanks for the question. So what we realized, if you had asked me this question last year, I would have told you yes. What we realized over time though, because they raised and then we raised, is the market and how huge it is. We expect a couple of things to happen. One of them has been sort of regional leaders in terms of this space. The other one we expect is fine-tuning on the tiers. So for example, the tier that Duhqa is focusing on is a very last mile. And what we find is that many are playing in the distribution of wholesalers, distribution of bigger, more manageable shops, or rather mom and pop shops. And the one that is a bit complex, which is sort of a supply chain big challenge, they don't tend to do a lot on. So what we expect is more fine tuning of the tiers and the focus of that tier. We see ourselves more towards the very small guy, and then we sort of see them a lot on these other more, as I said, nice looking particular stores, and that is why we don't feel the pressure now. Would they come to this level? Would we go to their level? I think that's the biggest question. What we've seen is that the way you approach it, then it also sets you sort of confined within that space, and you have to make a huge investment, especially to go really granular or really low. And so what you're seeing is that sort of we've been left to drive that market in that space, and they've been left to do that market, which is a finer market, so to speak.
Super helpful. Thank you.
Welcome.
Anyone else with a question, you're free to ask.
Okay. Hi. Hopefully I can go ahead. Thank you for that presentation again. I had a couple of questions. One, you just partly answered.
I don't know if it's me, but I've lost you. I can't hear anything.
Yes, hi Phillips, we can't hear you again. I think your mic has cut short. So while we wait for him to sort out his microphone, do we have any other questions from members of the room?
As we wait for him to come back, maybe Victor, you can just explain what other technology Duhqa has integrated apart from the credit scoring system that has positively impacted your revenue streams. Victor, I think your mic is on mute.
Yes, it is. Thank you for that. Yeah. So one of the things that we've done is we've integrated with organizations like Safaricom to make it easier to pay. We don't take cash. Of course, we take digital money, in this case being M-Pesa. And so as a result, what we do is that we focus a lot on driving an inclusivity when it comes to them being part of a banking or that part of a banked community. So for us to do that is we've now started working with financial institutions for this case. Because we're already in discussions with 3 of them, I can mention, but what you're going to see very soon is a huge bank backing us in terms of being their partner towards banking the small micro stores, so to speak. So that's already in play. We already are discussing in terms of API integrations, and it goes on and on. The other one that we've done is that starting this year, we looked at an interesting pivoting. And when I say pivoting, I don't mean that we are moving away from the business, but sort of just bring another business model. And this is that we realized that we were working with manufacturers and they were struggling with raw materials. And raw materials, I'm talking about grain, wheat, soya beans, and it goes on and on. So Duhqa, starting this year, we've now partnered with organizations that are aggregating farmers, and we are looking for markets for them to drive towards manufacturers. So they already trust us. We already know what they need. We've already integrated with a tracing and tracking organization that tracks from farm inputs all the way to harvest, how the crop is doing. And with this data, we can push to manufacturers who trust us enough to say, we are going to acquire that. So that will already be a big business for us. I mean, the first quarter, we saw $19 million already. And those numbers will be reporting in the later days, which really is exciting to see that such numbers are already starting to come from a new model that we started.
Okay, thank you very much.
One question I have from my end is that in terms of the financing, what is the default rate you currently established? Has there been any default on any of the financing loans you've offered to the microstores?
Yes, so our current default rate is 1.7%. We did see, however, previous default rates were about 3.2%, but we've stabilized now for the last 6 months at 1.7%.
Amazing. Okay, no problem. That's good to hear.
Okay, Victor, there is someone who has asked on the chat that, are you currently raising? And if yes, what ticket size?
Yes, so we are currently in conversations with people, especially institutions, gearing ourselves for the round of investment. So yes, we can talk about an investment. So the ticket size that we would take is about $100,000. So that's what we'd be looking at. We are planning to, but most importantly is that we are keen on investors who can add value, what we call smart money. So, people who can not just bring us the money, but bring us also, sort of more input in regards to what you're doing and driving, sort of active investors, so to speak. So that's what you're looking at.
Amazing to hear, Victor. Amazing to hear. So if there is no other questions for Victor, it was lovely having you on. I will keep you posted if any investors are interested. I mean, you can take us now to the next startup.
Okay, thank you, Victor, for your presentation. So the next startup that we're going to present is Rivuuz, led by Michelle. Also note that the timings will be the same for like the previous ones. 7 minutes will be used to pitch, and then the 7 minutes will be open to the floor for questions. Michelle, you can take us through.
Hi, everyone. My name is Michelle Chimuka, and I'm the founder and CEO of Rivuuz. So Rivuuz is Zambia's first construction marketplace that connects individuals who are building residential property to, to vetted service providers across various construction service categories. That's your builders, your plumbers, your carpenters, etc. So right now, the best way to hire a builder or an electrician in Zambia is through word of mouth, WhatsApp groups, and Facebook groups. So this here is you can see these are some of the Facebook groups that exist, and some of them have members in the hundreds of thousands. But right now, there's no way to know in this group who is good, who is not, or if somebody's even who they say they are. And I built a house before myself, and it was a very long and painful process that was filled with a lot of expensive lessons learned. And all of this was while I hired people that came recommended by people I personally knew. And I've been a member of these groups for many, many years. And I see that my experience is not at all unique. And the more that those bad experiences happen, the harder it is for service providers to find work, because home builders just trust them less and less. And the trouble then is that a lot of service providers primarily rely on referrals for new business, even the larger ones who are more established. So I built Rivuuz to sort of solve this problem for both sides. You can move to the next slide. So to solve the problem for service providers who are struggling to fill up their calendars just because of this lack of trust, the inability to market themselves, and for home builders who are struggling to find trusted and reliable service providers. The market is just filled with a lot of mistrust, and everyone thinks the other side is out to get them. So if you move to the next slide. So Rivuuz connects, we have a website, we don't yet have a mobile app, and I can talk more about this later. And we connect homeowners or home builders to vetted service providers. But we don't just stop there. We manage the payments, we manage the documentation and communication between the service providers. Because we've learned in the process of running Rivuuz that the challenges in residential construction go beyond just crooked people and poor workmanship. I think in residential construction, there's a lack of clear design, or just no design documents at all. There's a lot of unclear work instructions. There's a lot of unfair price negotiations, and just a lack of coordination between different construction teams, which cause a really bad construction experience for both sides, but also cause a lot of costly mistakes for both the homeowners and the service providers. So we're building out an end-to-end solution that it's not just about the connection, but it's sort of managing a bit of the relationship all the way to the end of the job and the goal for us is to provide a radically different construction experience, a radically more positive construction experience than what currently exists. You can move to the next slide. Sorry, I think the font's changed, so the slides are a bit skewed. So we have a website at the moment that's optimized for use on mobile. And right now, a home builder can go onto Rivuuz and search and view different pros who we have information on. Their experience, their background, work they've done in the past, as well as, and most importantly, ratings and reviews from other customers, hence the name Rivuuz. You can look at portfolios of work they've done in the past, so pictures, a bit of details of work they've done in the past. And you can move to the next slide. And we've had a number of people who find that this end-to-end support, it's not just about connecting to a service provider, but that people don't have to worry about when is the person coming, are they coming, is this person qualified? And it's this whole relationship that we manage internally with a combination of both technology and human beings that provides this positive outcome for a lot of our users. You can move to the next slide. Sorry. So right now, the construction industry in Zambia and across the continent is growing rapidly, but it's also really highly fragmented. There's not a lot of dominant players, especially in residential construction. So it's quite a big market opportunity. And right now, Zambia alone has a 1 million housing deficit, and across the SADC region, that deficit grows to 11.5 million houses, just owing to factors like urbanization and population growth. And right now, affordable housing is not a top government priority across many countries, and less than 10% of Africans can access a mortgage. So the self-built residential market has a lot of market opportunity. So not just in Zambia, but across the continent. But building a marketplace is a careful balance of, and I'm sure because this is an e-commerce setup, it's a careful balance of speed and depth. So just growing our user base very quickly doesn't help us, is a bit of a vanity metric. So we're deliberately constrained to only focus on Lusaka City at the moment. We only operate in Lusaka City until we get to a point of good marketplace liquidity for both the service providers and the service users. And this is sort of the proportion of service providers who are getting jobs versus the proportion of customers who are able to come onto the platform and find the right pro for the job that they need. And right now, Lusaka, sorry, could you go back to the slide? Right now, Lusaka has a 10% annual growth rate, so it's a good market for us to start geographically. Sorry, you can move to the next slide. So currently, how we make money is we charge the service providers 10% commission for getting jobs onto Rivuuz. So it's free to join, but they pay 10% commission with every job that they get. And we also offer add-on bespoke services to the home builders, just to, again, reduce the amount of friction, the amount of different touch points in the whole transacting process. And again, like I mentioned, we're slowly moving towards a fully managed marketplace from where we started being very lightly managed. And we find that with our concierge service customers, the product is a lot more sticky. Customers who start to use the concierge service just don't want to do it any other way anymore, because we take a lot of the stress of following up with the service provider and all these sorts of things off their plate. You can move to the next slide. So we originally launched Rivuuz with a lead generation model. So the service providers would pay for leads. And in 2022, at the beginning of 2022, we introduced our commission and concierge revenue model, which showed such growth more than we had imagined, that at the end of the first quarter of 2021, we discontinued the lead generation model to focus more on the commissions and the concierge revenue model. And as we continue to grow, we'll continue to grow these out a bit more. And at the end of 2021, we were doing much higher. At the end of 2022, we're doing much higher revenue than this, but our revenue has taken a dip in the beginning of 2023 because we've been focusing a lot more on making a lot of different product edits that help us provide a more full stack service experience to our home builders. You can move to the next slide. So I launched Rivuuz in November 2020, and since then we've had over 320 people sign up to be service providers, and we currently have 94 that are active. We have some that are still going through our due diligence process, but then there's also a larger number of people who don't pass our due diligence. So we try to keep the quality of the pros who get onto the platform quite high. And right now we've had over 600 inquiries come onto the platform, and we've sent out 579 to different pros. Our pro signups, especially for 2023, we haven't been running any paid pro acquisitions. We have 42% pro signups just owing from our organic reach, but also from a lot of referrals from existing Rivuuz pros. We try to maintain a balance between growing through paid marketing as well as organic. So we're very focused on growing a lot of our organic traffic on the site, and also growing through partnerships, because building trust in Rivuuz is a big part of our long-term growth strategy. Trust is a very core component of the construction market, so it's where we want to focus. You can move to the next slide. So I've spoken a bit more about our revenue. Right now, thank you, Melanie. So right now, our gross merchandise volume on the marketplace is over 400,000 kwacha, and our average order value is around $120. And we're seeing this growing month on month. And even in the fourth quarter of 2022, it was actually a lot higher than this. But as I said, we've taken a dip in both GMV and revenue in the first quarter of 2023 because we've been focusing a lot on the product. You can move to the next slide. So our biggest competitor at the moment, as I mentioned, is Facebook groups and word of mouth, because this is how people are typically used to buying and selling construction services. But there's a few other startups in this space, but our go-to-market strategy and our business model is much better positioned for the way Zambians want to buy and sell services. We do due diligence, which other platforms don't. And we also, like I mentioned, we have a geographic focus on Lusaka, which allows us to offer a much better service than other platforms. We also have a big focus on community building, which in Zambia, like the Facebook groups, people want a place where they can share and ask about how their project is doing, learn about how other people's projects are doing. And for us, this is a big part of both our growth strategy and our trust building on the platform. You can move to the next slide. So at the moment, we're trying to raise a seed round of $200,000 through a combination of both equity and debt. So I'm happy to have conversations with anybody who's interested in coming on board on our journey. So thank you so much for your time, and I look forward to your questions.
Thank you so much, Michelle, for your presentation. We'd like to open the floor for questions. Anyone who has a question can ask Michelle.
So, Michelle, one key question I have is that, what is the current plan to work with like development partners? So are there current moves in place to talk with like residential development partners, like housing development partners, people that build houses for sale, for lease? What are the steps being taken in that direction?
Yeah, absolutely. Thanks for that. Yeah, so like I mentioned, so a big part of what we've been doing in the first quarter of 2023 is working on our product, on building going from lightly managed to fully managed marketplace and building this end-to-end customer experience. And absolutely, one of the ways we grow is partnering with companies, with property development companies that are focused on residential. And our focus is really on residential versus commercial because the pain points are different. Commercial construction is a bit more organized and formalized in a way that residential construction isn't. And so it's about building a product, for one, focus on building a product people love, and then being able to take this and build in these partnerships that allow us to sort of scale our growth.
All right, that sounds great. That sounds great. But in terms of partnerships, won't commercial developers, won't they also require handymen to carry out their services to be able for them to execute?
Sorry, can you say that last part again? To be able to?
To be able to, let's say, to build a commercial building, let's say a 12-story building, right? You still need handymen. You still need your bricklayers, your plumbers. So how do you intend to break into that part of the market?
Absolutely. Well, both commercial construction and residential construction need the same pros. In the same way, like when I was showing the competitor slide, so the other startups working in this market work more on like on-demand repairs and maintenance rather than construction. So all these markets need the same electricians, the same plumbers, the same carpenters. But when I say we focus on residential construction, it's just around the focus of messaging and the customer journey that we're building. So it's not to say we don't work with commercial construction partners, but it's just around where we focus at the moment because we're just quite early at the moment.
All right, that sounds great. Thank you.
Maybe as the floor is, as people are preparing to ask questions, I can ask you one, Michelle. So in offering a streamlined end-to-end support to your existing clients, maybe if you could kindly expound on some of the risks and potential rewards that your startup has experienced.
Yeah, thanks. So I think providing also an end-to-end experience means taking more control of the experience, which means one, I think taking on more risk of, as opposed to just connecting pros and customers and leaving them to it. But we've decided to go that route because it's the only way we can provide, like I said, a radically better experience for service providers and for homeowners. Because construction has lots of disciplines and so many variables that an unmanaged or lightly managed marketplace just wouldn't be able to control for. And by taking on that additional risk, there's things we're building into the product. For instance, we just introduced independent quality inspections at different project milestones. So right now, the options that exist for building a house is either that you hire a big construction company and that charges quite a lot of money and it's out of a lot of customers' reach, or that you hire your own builders, plumbers, carpenters from Facebook and you become the contractor and have to supervise them when you don't quite have the skills to. So we've added this layer of independent construction supervisors and assessors who work with Rivuuz on a freelancer basis. So one, that's a scalable team of experts, of construction experts that we build into projects to do these inspections at key points, which is then tied to payment milestones of the job, which one reduces a lot of the risk of something going wrong. Like I mentioned earlier, a lot of the challenges in construction are not just because someone is crooked, it's just the instructions weren't clear, or maybe the information was given to the wrong person or at the wrong time. So one of that is trying to control that a bit more. And one other thing, when we talk about partnerships, is we're also currently discussing a partnership with an insurance company to add an insurance component to both the service providers and the home builders on Rivuuz. So in taking on some of that risk, we are also putting in these measures into the product of how to reduce the risk, both to Rivuuz and to the service providers and the homeowners.
Thank you very much. Anyone else with a question?
All right, if we have no more questions, Michelle, thank you for your time today and thank you for telling us about Rivuuz. Great thanks to you and Victor for being on this session. So now we'll kindly exit both of you from the call so the investors on the room can have a brief discussion and we'll get back to you with those interested. Thank you so much.
Thank you so much, everyone. Have a good evening. Bye-bye.
Thank you all. Bye.
Hello, everyone, and I hope we all had a great evening. For anyone interested in either of the two startups that pitched today, just kindly reach out to me on the Digital Trade Angel Network group so we can accumulate our interests together and get back to the investors. We'll keep in touch with also upcoming events we plan to host for the Digital Trade Angel Network and upcoming activities we want members of the group to be involved in. So thank you once again for joining in and do have a nice evening.